Today I'm going to show you how to avoid the big mistakes made with construction home loans. These are the same tips I've used to help my customers go from being declined to approved. I'm Josh Vecchio, mortgage broker with Hunter Galloway, and in this video I'm going to walk you through the 4 ways to avoid the big mistakes with construction home loans. Let's jump in. Last year we saw a troubling trend. Construction loan after construction loan decline. It had nothing to do with our customers' financial positions and everything to do with the bank's valuers. They had changed the methodology without telling anyone. Never before had we seen so many low valuations. It was by taking these lessons we learned through trial and error that we've since cracked the code. And by using these same techniques, you too will be able to avoid the big mistakes. 1. Do it all at once. Having made the decision to build a new home, the first thing you want to do is avoid rushing. Remember that fast is slow, and as counterintuitive as this sounds, slow down, take your time, and don't be pressured. When buying land, there's always demand to settle as quickly as you can. In Queensland, generally the seller will want this done either within 30 days of the contract date or 14 days from the land registration. The first thing you're going to want to do is to change this. Have both the finance and settlement terms line up with the construction. This means rather than owning your land first and months later getting a loan for the construction, you'll have the ability to get approval for both land and construction at once. This is hard, as we'll need to allow your builder enough time to prepare the fixed price building contract and plans and specifications. The time this takes ranges from builder to builder, but by and large can take anywhere from 1 to 3 months, depending on the level of customization you're after. Using someone like a builder broker will help expedite this. It was only mid last year a customer of ours bought a block of land and settled 30 days later. At this point, the bank had valued the land at purchase price. All progressed without a hitch. Fast forward 3 months later, when they were ready to build, the bank completed another valuation and undervalued the land by $20,000. This was the same valuation firm who months earlier valued it at the same price they bought it for. In short, the market's fluid and it never stands still. The only way you'll know what you're able to do is by doing it all at once to get the approval for both the land and construction at the same time. 2. Recent sales. If you're in a new estate, the bank's valuers will have troubles valuing your property. The valuation report is known as an as-if complete valuation. That's to say, when the property is completed in that market, what will it be worth? Now, if you're in a new development, there may not be any properties in the area that can be comparable, as the valuer will be looking at the past 6 months history. How to avoid this is to offer the valuer sales history from the suburb over, giving the valuer context and something to work with. It's best to do this up front, as once a report is produced, the horse is bolted. To do this, you'll want to attend 5 to 7 different open homes in that area. Be sure that at each open home, it's a different agent. From there, you want to discuss what the agent's seeing in the area and if they're able to appraise your property. Many will decline and say that they're unable to complete this until the property is finished. Instead, ask if they can collate comparable properties which have sold recently in that area. Once you've got this list, whittle it down to no more than 7 to 9 properties which have been sold within the last 6 months, and preferably the last 3. Explain the reasons why these properties will be comparable to your finished property. At this point, you want to email this list to the valuer before they inspect the land, as will essentially have done their research for them. And whilst this seems overkill, it'll reduce the pain of a low valuation and ensure against potential issues. 3. The numbers. When the banks value your property, they look at the data to complete the valuation. The primary data they use to confirm the value of your property includes the number of bedrooms, bathrooms, car spaces, floor area, and size of your land. So an easy way to increase the value of your property is to increase these numbers. So for example, if you're looking to have a study in your home, rather than building a study, invest a little bit more and make it a bedroom. The main difference between a bedroom and a study is whether or not it has a wardrobe. Not only will this help your valuation, but it will help when you look to sell in the future. 4. Variations. A common problem is that people rush to complete their building plan, getting it into the bank as quickly as they can, only to change these weeks later. Remember, take it slow and look at every detail. Get it sorted before getting your home loan approved. In most cases, once the bank approves your loan, any changes to the contract will result in you footing the bill rather than the bank. Hope you found these tips helpful. If you did, please hit that subscribe button now. And until next time, I'll see you then.